PremFina are disrupting premium finance in the UK. I'm going to talk about how we are technology-led. We are a true fintech company. We own our own system, our own intellectual property. We can white label, and it is completely flexible. It is a pick and mix system with financial benefits to all brokers. So let's look at the UK market at the moment. The incumbents are funding-led with legacy systems supporting them. You have to take all three of the aspects of premium funder. So you have to take their software, their funding, and their servicing model. We come to look at this as a different way. So we are purely technology-led. We have funding behind us, but we believe technology is the way forward. So you can take our software. You don't have to take our funding. You can self-fund and reap the benefits from doing that yourself. You can take our funding and our software, or a mixture of both. And we discuss the servicing model with you, so we don't give you a rigid servicing model. Schematically, we believe that the incumbents are rigid in the way they deal with matters, and they don't provide you with any additional income, even if you are using their funding, whereas we are flexible, and I'll come on to how we generate additional income for you, even using our self-funded model. So we've got a hybrid system. It is software as a service, so you can take our software, pay for the use of that software, and use your cash and generate very good returns from your own cash. Alternatively, you can take the software and use our cash and benefit from some additional income from the fees, as I'll come on to. But probably the most interesting one is the hybrid model. So you can use your own cash and part of our cash to fund your premium finance book. You all know that premium finance is a short-term liability, maximum 12 months, quite often only 10 months. So you can forecast your cash in 12 or 18 months' time, and if you've got an acquisition coming up, you can decrease the cash that you've got deployed in your premium finance business and increase the utilisation of us. Or, if you think that you're going to have additional cash flow coming through, you can ramp up your funding into your premium finance business and reduce reliance on us, thus enhancing your returns. I talked about increased income. When you're funding with the incumbents, they don't tell you what fees they charge, how many fees they are charging, or what actual income they give to you. We recognise the work that brokers do in servicing premium finance. So we enter into fee sharing agreements with brokers to recognise that arrangement. I've talked about how you use your own cash, but what are the benefits to you? Just looking at the model here, so if we assume, in round numbers, £1 million worth of premiums funded, with an average premium of £300, spread over 10 payments, with net rates of the client of 11%, default rates of 3 and 1%, and you charge £25 for each of those. To fund £1 million worth of premiums, you would need to use £375,000. The return from that £375,000 would be £103,805. In percentage terms, you'd be making nearly 28% return on the capital invested. Now, bearing in mind where banks are with interest rates, 0.25%, it's a much better return than that. You know the underlying risks that you're funding. And okay, you might have an acquisition on the horizon, but we all know that the market for acquisitions is hotting up, multiples are increasing, and it may be sometimes all that settled, so why not put the money to better use in the meantime? When you're self-funding, another benefit is the control of your credit decisions. People in the room will have had credits turned down by premium funders because they don't like the risk. Maybe your customer last year had a bad year, so the balance sheet doesn't look quite so good. You will know your clients, and probably have done for a long time. You know their business models, and more importantly, you know the policy you're funding. So you can make a decision whether or not to fund that client. You may take it to one side and say, look, okay, the credit risk has increased. of doing 10, let's do 6 payments or 7 payments. You can structure it so that it meets your client's needs whilst making sure that you are protected as well. I said we're a fintech company. Basically, we have got a system that integrates in real time. When you hit the activate button on the system, it automatically creates the policy documents in an e-signature portal. Your customer gets sent an email saying that they can link into their policy documents now, and they can e-sign and view all of their documents. We built 90 application program interfaces into our system. We are integrating with all of the software houses, so that when they become real time, everything will happen instantaneously. I was talking to a gentleman earlier. If you've got your own proprietary system, we will give you the API code, so you can actually link in with us, so that you can build your system to liaise with us. The overall goal is to save time for the broker and reduce intervention at the back end, so that it increases your productivity. White labeling. At the moment, you would write a premium finance policy and it will be branded with someone else's. If you are self-funding, all of the documentation will have your branding, your name, your logo, signed by a member of your staff as the person going out, all done electronically. If you're funding with us, we will still white label. So the welcome letter will go out with you, with your logo, your name, and signed by one of your staff introducing PremFina as their premium funder. All of the regulatory documentation has to have our name on it if we are funding or lender of record, but everything else that isn't regulated will be branded with your logo, reinforcing the message to your customers that you can cover all situations. So in summary, we are a complete flexible premium finance solution. We have market-leading software which you can use your own cash with. Or, as we discussed, you can use your own cash or your own cash and part of our cash. We have £57 million worth of funding lines available to us, and we are able to increase those as we need to. That's a bit small. So software features, just very briefly, it is SaaS, it's software as a service, it's pure fintech, financial technology. It's cloud-based, you do not need to load anything onto your system, everything's done in the cloud, updates, everything else. We back up every 5 seconds. We are aware that everything needs to be real time. We back up in dual locations. We have one of the best technology providers in the UK supporting us, and we have full disaster recovery. Integration. We are integrating with all of the proprietary softwares at the moment, and we can integrate with your own software system as well. It's all about streamlining the system and making back-end intervention as little as possible. The system itself is flexible. We can make it work how you want to. It's actually a banking system that we're utilising, so it's robust. It's tested to 1 million new sign-ons a month. That's including whatever's in the underlying database, so 1 million new sign-ups a month. As I mentioned, it's our own system. It's not licensed. We have our own intellectual property, so on customer feedback, we can make amendments to it. We don't have to get approval to do so. And the feedback from the brokers is it is user-friendly, it's very intuitive, very easy to use. I can use it, so it must be fairly simple. And it is there to manage your financial solutions easily. We won a few awards with the technology, which we can look at later.